start with, have we had any apologies for absence, Debbie?
We have Councillor Habib Farbahi and Councillor David Fothergill, and Councillor Mike Hewitson is online.
Okay, thank you. Welcome one and all. And we will now press on. So, minutes from the previous meeting, is it your wish that I sign those as a true record of that meeting, or are there any corrections anybody wishes to make? No, in that case, I will sign those. I will propose it. Peter, will you second?
I'm happy to second.
And those in favour? That was unanimous. Excellent. Thank you very much indeed. Right, will we move on? Declarations of interest. Are there any others that have not been made aware of? No. Okay. Public question time. I'm not aware of any members of the public here. So, no, we don't appear to have any. Okay, in that case, we'll move straight on to item 5, which is the Independent Investment Advisors Report. So we have a verbal update, I believe. So, yeah. Caroline.
Yeah, well, good morning, everybody. As I say, what I've tried to do is give a few comments to stimulate thought, rather than trying to say, here's a forecast of exactly what's going to happen. But I'm very happy to expand on what I've actually commented on, or have a go at any other issue that people would like me to have a reaction to.
Okay, ladies and gentlemen, questions for Caroline. Michael.
Good morning, Caroline. I just wondered, we're talking quite recently, the problems with Trump opening his mouth, and is the market going to bounce back in any imminent sense to the previous levels? Are we looking at a long-term, depression of the market, or is this, it's already starting to come back? There was already a slight bounce as far as I can see, but you're much more able to let us know, I think.
Well, in fact, if you look at the indices, they have bounced back pretty much to the level that they were at before. And as I said, I think the real issue now, I mean, Trump changes his mind every day, and clearly his negotiation tactics, I think we can understand a bit more of them now, which is to do something outrageous, which brings people to the table, and then backtrack on it somewhat. At the moment, I think markets, the equity markets, are reasonably calm, perhaps surprisingly calm, because they aren't yet seeing any very negative numbers on the on corporate profits, and the basic economic numbers still look reasonable. The bond market, as I've said, is rather unhappy because it seems irresponsible spending on the part of the government, and with Trump's inclination would be to do more of that. So the trouble is, with things changing every day, it's a bit of what's this space, but certainly the equity market for the time being has decided to say we can live with this.
Thank you. Yes, I'm going to ask I'm going to ask another question, but I'll leave you with that. Thank you very much.
Oh.
Right, just the one question about any discussion that's happened given the pensions announcements, merger of funds. There hasn't been an enormous amount in the press, not as much as I would have expected, but from your perspective, from fund manager perspective, is there any sort of consensus or view now on the likely impact of that?
It isn't really going to have any market impact. I think the impact is more on the funds and who ends up going where. There are obviously a lot of discussions going on with the two people, with those who are affected by the forced merger of Brunel and of Access, and of course I advise funds in both those pools. But at the moment, I think it's what's going on is more exploratory than anything else. And I'm not actually privy to any of the discussions that are taking place. And if I was, I'd be conflicted.
Obviously, the bit I'm interested in is if we're going to get more focused on the UK, on the the potential impact on that, on the number of schemes that become available and the performance of the pensions fund. But I guess we'll just have to wait and see for the debate to play out and maybe action to be taken.
Yeah, I think this is a fairly long-term change, and I don't think people are going to rush out and throw everything out and do it all in one go, whatever. I mean, I think more of an issue is the question of the local investment and how the pools are going to become qualified to make these local investments. I think there's going to be a lot of bad investments made.
The next part of that conundrum is what is local. John, you had a question?
Yeah.
You use your mic.
Sorry, is that better? No, I was just going to say with the rising of global debt and everybody sort of rushing to gold, and the sort of the bond market, the way the bond market's going, where are people once they want to sort of invest in their economies and that sort of stuff? Where are they going to borrow the money from? Because Japan, who was always the place you went to get some cash, are not going to be in that position, and nor's China, really.
No, it's an interesting question as to quite how it'll pan out. I mean, in the end, most markets are funded by their own domestic borrowers in the first instance. So maybe we're talking about a very sharp spike in interest rates to get domestic investors in there. You get some people talking about all the money that's held by continental European investors in cash and how if only that could be put to productive use, it would all be absolutely wonderful. But I'm not convinced that the Germans, who have refused to invest in anything but bank deposits since the end of the Second World War, are suddenly going to change their minds. I think it's a very open and a very good question, to which I don't have an easy answer.
If it was easy, we'd all know the answers, wouldn't we? Okay. Any other questions? Any other queries for Caroline? Okay. Well, I'm not sure how far we're going to get with it as we move forward. If there are no other questions, no other queries, no. Okay. In that case, we will move on.
Chairman, I have to leave the meeting now. Thank you.
Caroline, of course, and thank you once again for
Pleasure.
coming, and I look forward to our next meeting. Take care.
Yeah, hopefully in person. Bye.
Okay, bye-bye. Right, pages 11 to 34, item 6, which is a review of our investment performance. And I'm going to turn to Anton, as I do so frequently in these situations. Anton.
Good morning, all. So I'm going to restrict my comments largely to the whole fund, starting on section 16 of the report on page 26 of the pack. But always happy to take questions on any part of the report. So the Q2 March was quite disappointing in terms of return, negative return. Again, yeah, you start breaking that down. January was absolutely fine, made a positive return. February was quite quiet. March was included Liberation Day, as President Trump likes to refer to it. And so obviously that was the point at which everything took a bit of a kicking. And you can see that very much in the equity returns, particularly. So the small cap and global passive and the global high alpha all were very negative. There's definitely effect there because, as well as stock markets being poor generally, The US dollar specifically also took a lot of a hit, and therefore any assets we have that are priced in dollars, also we take an FX loss on those. So that's why actually the UK made a perfectly reasonable return in that quarter, but most of the others were not. I suppose I also should point out that oil did rally in that period, and that's most of the difference between the passive global equity and the global high alpha equity. In terms of one being the passive benchmark we measure ourselves against is explicitly light of fossil fuels. And disappointingly, Brunel didn't do particularly well relative on a number of portfolios. And also the Neuberger Berman private equity portfolio, quite a large loss at minus 2.6. Again, that's very much driven by the fact that that portfolio is entirely priced in dollars. Coming back to Councillor Dunk's question regarding sort of what's happened since then. In April, the fund lost another 1%, just over. The benchmark figure for May is a return of just shy of 3%. I haven't actually worked out the actual fund's return for that for May yet, not least because the data doesn't get released until the 12th working day. So I think that's sometime, is that Monday, is that Tuesday next week? But I can work out the benchmark figures on the first working day, and as I say, that's indicating a 2.9% uplift in May. So yeah, we probably haven't got back everything, but in the overall sort of scheme of things, it's not too bad. I suppose the other thing to sort of look at, particularly at this stage, is the graph in 16.6 on page 28 of the pack, which is the performance against the absolute return target, which is also the return target that the actuary assumed at the 22 valuation, and therefore we have more or less a complete picture for the 3 years. And you'll notice that we are basically in line with that requirement over the 3 years. Just the only caveat I will add to that is that Barnett Waddingham, our actuary's methodology, is to smooth the asset value over a 6-month period, being 3 months either side of the valuation date of 31st of March. So we are still on the hook, as it were. But given that aggregate performance in April, May and June to date, most equity benchmarks in June are about 1% up at the moment, or certainly they were when I looked at them on, I was out of the office yesterday, so it would have been Wednesday night. So I think it's fair to say we're, on a returns basis, our valuation results aren't going to be massively impacted versus where we were 3 years ago. I will also, seeing as we're talking about it, I'll just note that it is my intention to invite the actuary to the December committee meeting for them to provide you with the preliminary results direct, and I'll allow you to discuss those with the actuary. So that is sort of in the work plan. Let me just think if there's anything else. I don't think there's anything else I wish to raise under that report.
Okay, questions. The only comment from me is we would welcome the actuary on, at our December meeting, and I'm sure we will give them a customary warm welcome. Peter?
Thank you, Chair. Would it be reasonable, looking at the figure of performance versus the 4.6% target, to remind ourselves that that 4.6% is about achieving an on-time convergence of with the plan, and so effectively the effect of the slight downtick, not slight, all right, the downtick that we see in the last period on the graph is to return us to the planned time frame for getting the fund into balance against the actuary's last work.
Yes, so we adopted a 25-year deficit recovery plan at the 2013 valuation. In my preliminary discussions with the actuary, so that's 2038, there is nothing I have seen to suggest that we should either accelerate or decelerate that. The assets, as I say, look like they are going to be broadly on plan. We are currently having our customary deep investigation by Barnett Waddingham on our longevity as a specifically our fund and our data, as opposed to more UK-wide and data. I believe the demographics will be probably financially slightly in our favour, i.e., unfortunately, more people have died slightly earlier than was forecast at the last valuation. So I'm broadly expecting a valuation result in terms of the funding level and the deficit recovery plan. At this stage, with certain amounts of data still to come, I'm expecting something that's quite unexciting, which is nice actually. And I'm also expecting our discount rate to be slightly higher. So the investment assumption for the next 3 years, because bond yields in particular are significantly higher than they were in 22, I'm expecting that to be slightly higher expectation. Now, obviously, in theory, that means we have to work a bit, well, no, our assets need to work a bit higher, harder over the next 3-year period. But it does mean that the size of the deficit and the costs of the fund, possibly all other things being equal, will come down slightly. So I don't think I'm going to deliver bad news per se to Clive Heafy is our new 151, who I met on Monday, and to Councillor Leyshon on next year's budget for the council.
So I understand what you were saying there, but for the benefit of the record and any public that might be watching, I think it's reasonable to say the fund, there's no reason to panic on the ability to pay out. There's no reason to panic on the ability, on the intent to recover the fund back to the position it should be, where it's where it hasn't got a deficit, and that other factors are in play. You didn't mention in your explanation the potential transfer costs into pooled arrangements, which of course somebody has to pay for. But the key thing is the pensioners, there's no threat to a pension here.
No,
so the fund is healthy. There are no reasons to panic despite
yes,
that downtick.
So as part of the external audit each year, they would test our going concern assumption. And the conversation I have with them usually goes along the lines of the vast majority of pensions in a given year are covered by income in a given year. So I haven't seen this year's accounts yet, but I would guess we might be something like £4 to £10 million of net expenditure on a fund that's worth 3.4 billion. So that's 340 years. Now, perhaps a more reasonable way of defining that is our annual expenditure on benefits is about £120 million. Obviously, as I say, that's more based on last year than this year, but as a ballpark. And again, 3.4 billion divided by 120 is 30 odd years. We have no concerns whatsoever that we will be able to pay our pensions. The deficit is against being 100% funded, and 100 because it's slightly logical, but also because that's the number we've adopted in our funding strategy statement. So that's the two reasons we are targeting 100. So in a sort of, can we pay pensions? Do pensions need to worry? No. Do pensions need to worry in the context of all the things that are coming through the media from government, the pooling changes? No, that does not affect your pensions. But your pensions are not affected by our investment return. So your pensions are safe and our ability to pay them is absolute. I will come back to what some more information on possible costs of the transformation under that item, because also I would like to have a discussion about those values in private session at this stage.
Okay, Peter?
Well, I think that your statement is the bit that should appear in bold in the minutes. Even if you're just joining the scheme, and we screwed up royally, we would still be safe as long as you're likely to be in the scheme. Your pensions are safe, and I worry that when we put graphs out which have downticks on them, people may not understand the context. And I think you gave a very good summary of the context there. Thank you.
And I also entirely agree that we will have a private session later to discuss the sensitive nature of some of those potential costs. Michael, you were first, and then Paul, please. Michael.
I just wanted to quickly flag up really that our exposure to America in terms of the equities, it is quite noticeable that we have more, I think, probably equities than the other funds in our group, the other sort of councils, or whatever we like to call them, client group. But is that inevitable? Because I notice here the global high alpha equities, and unfortunately they don't differentiate between South America and North America. It's just called Americas, which isn't particularly helpful considering what's happening over there at the moment. But is this inevitable in terms of investing, and everyone else is faced with the same problem, or are we able to choose to move away from America if it looks like it's going to be a problem?
I suppose if you are investing in a global product, equity product, there is a benchmark associated with that, and typically fund managers will want to know how far from that benchmark they are in what they actually own and what risks that implies to them. Currently, I think most global equity benchmarks, depending on the precise one you choose, are around 55 to 60% USA. And that to some extent is because you've got a group of 7 or 8 stocks that have dominated stock market growth globally for the last, I suppose you could almost say, decade. And they're all American. And what you will get is fund managers adjust fund managers will look at it, and ultimately, if they don't believe that US stocks will produce the profits that will make the returns, specifically if they think that non-US listed stocks will produce better returns, they will move, but it will be gradual and small. It won't be 30% of the funds suddenly moving somewhere else. I haven't looked at statistics from Brunel's portfolios specifically, but anecdotally, a lot of fund managers have rebalanced in this sort of calendar year to date, not insignificant amounts towards Europe from America. So it does happen. And again, how we define those companies in investment management terms is where the firm is listed on a stock exchange. That is usually, but not always, where it's domiciled, and there's no relationship whatsoever to where it actually does business. So Microsoft, for instance, does business globally. If the dollar is weak, then actually when it reports its profits from overseas, they will have grown. So you can get perverse effects like that. And the reality is a significant portion of the businesses we invest in are global businesses. And the thing that markets dislike the most is uncertainty, which obviously in a Trump world is not ideal, because he deals in uncertainty and chaos as part of his modus operandi. And I think he would probably agree with that as much as anyone. So if we can get to a point where there is relative certainty about something, then markets and indeed CEOs running those businesses will go, okay, I now understand where we are, I can plan and adjust and can move forward. But when there's uncertainty, stock markets tend to not go anywhere fast, but can be quite volatile. And companies tend to defer investment decisions. And deferring investment decisions tends to defer profits eventually. You know, why invest in a new factory in a given domicile if you have no idea as to the tax and tariff regimes that will be applied to that business? Because you can't then, with any certainty, be sure as to whether that investment will yield a profit or not. And there's never true certainty, but there's periods of greater uncertainty, and we are just going to be in one of those for the next, almost certainly for the next 3 years.
So just to recap, you're not over concerned that we have quite high exposure. It's a common problem, and we're probably going to have to ride it. Yeah.
And
Good
indeed,
summary.
in an LGPS context, we are probably mildly unusual now to have a dedicated UK equity portfolio. And by definition, that reduces our exposure to the US compared to a lot of others.
Yeah, I won't prolong the debate hugely. We're in it for the long haul, so the pretty poorly quarterly results, I think, in the context of what's going on, not a surprise and not a concern, other than the graph that you pointed us to and how it takes us across the year end on its current trajectory with the actuarial review. Appreciate and note your reassurance there, particularly in terms of the performance for May. So it'll be interesting to see how that plays out, but I very much welcome that performance. The only specific question I have is you just briefly mentioned that Brunel hadn't done particularly well comparatively, and I wonder if you just give us some indication of why that was.
How many layers do you want to go down? Because obviously what Brunel actually do is appoint third-party fund managers. So it's then a question of how each of those underlying fund managers have done. And again, in that context, typically quarterly performance is interesting, but it's building a pattern over time that's important. Brunel have recently changed their two managers on their emerging markets product. It's too early to say whether that's gone well or not, because literally they've had 1.5 months within that period that I'm reporting to. There are other changes I am aware of starting, but I can't refer to in a public forum because it involves commercial fund managers that may or may not be listed companies as well, and that would therefore would be market sensitive information. And this is not where I want to be done for insider trading or anything. So they are. So I suppose also then there's a process there. So Brunel have their own internal processes. As a client group, we dedicate one meeting a quarter where we specifically go through the portfolios and go, well, XYZ, there's a trend there. What do you think about that? How long are you going to let that trend persist? And so that dialogue and that pressure from us as me representing you is constant. Along with, at the moment, trying to emphasise to Brunel in not great circumstances following the government's letter that we absolutely, their first priority is to concentrate on business as usual and keep on working at the investments as though nothing was happening and to get us as good a returns as they can.
Okay, I'm not seeing any other question. I'm not seeing anybody asking questions online. Now, the committee's asked to note that report. I'm going to propose that from the chair. Second that, Peter. Thank you. I can see those in favour of noting it, please. Thank you. That's unanimous. Thank you very much. Item 7 on our report, which is pages 35 to 46, which is a review of the administration performance. And again, it's a report from the head of Peninsula Pensions.
And I believe Rachel is on leave this week, so Xander Thompson is online to take you through this paper. Good morning, Xander.
Yeah, that's right. Good morning. Thanks, everyone.
Good morning.
Would you like me to share my screen, or how would you like to do this?
Whatever's easiest for you.
Whatever's easiest. Okay. I'll try and share mine. That way we're all looking at the same thing, hopefully. Just bear with me a moment. Get the technology working. He says confidently. Why does it give me 15 windows to choose from? That's the one I want, I think. Hopefully everyone can see that.
Yes, we can confirm that we can see that now. Thank you.
Lovely. Okay, there we go. That's the first hurdle overcome. Okay, so I'm not sure the composition of the committee, whether there's any new people or not, but I'll sort of briefly touch on the backgrounds that.
No, Xander, we haven't had elections in Somerset this year, so
right,
we're all returnees.
I can continue as normal then. So we're familiar with the disclosure regulations we're measuring against, and how these sort of performance targets are gathered and done through the sort of task management system. So I'll just jump straight to the highlights then, the administration team performance. So Slight improvement, I think, on last year, which would have been 94%. So it's 95% overall for this particular bit that we're looking at. 96% for high priority procedures, which we'll look at in a moment. During the quarter, we had 6 compliments recorded. And then we can sort of focus on the appendix, which sort of provide a bit more detail. So Appendix 1 is the breakdown for the quarter, set against the disclosure regulations and our internal targets. So we can have a quick look at that if we want to. Just find it for a minute. It's that one there, I think, yeah. So I'll just start at the top here. So you've got the information there, which I think is done on a quarterly or regular basis now. The total number of days from retirement date to the date of process, the days after retirement, depending on when the information is received from the employer, and the number of days the options are provided, and members get it back to us. So unfortunately, still only 2% of retirements notifications received in advance of retirement, but that's typical of most employers and how they operate. And 40% of retirement notifications are received more than 1 month after the day of retirement. So I think it's just worth bearing those in mind when we come to look at some of these numbers. So as we touched on, pretty good performance. Very happy with the performance across all the areas, the high, medium, and low priorities. If we just look at the high priority cases, you'll notice the odd one on there is the active retirements, which we have sort of put an asterisk against. And they tend to be for varying reasons of gathering extra sort of data and various complications on member records to do with Remedy and McLeod, which we'll come on to later on, hopefully. And we're still sort of getting to grips with some of those processes and procedures now that we're up and running with it, so to speak. In terms of medium priority, again, very good results there overall. So happy with those. And the low, again, rather happy with those. You'll notice the issue with transfer outs. They do typically take a longer time if you sort of follow the pension regulators sort of flag system and how they want you to do transfers. It's sort of deliberate and done like that. So trying to do them within a 10-day working period it is quite a challenge. So that's why that 73% number is there. I think these were requested previously to be put in the report. So the complaints broken down into the categories. So out of the 9 complaints received, we've just detailed them there. 7 relating to timescale clarifications, which we had to provide to members. 1 regarding information being waited upon from a third party, so a different sort of administrator providing his information. And 1 sort of misunderstanding, miscommunication around information issued to members originally based on an initial request. So that was sort of tidied up and sorted out. So I think that's Appendix 1, and then we've got, I think, because obviously this is the details to the 31st of March, we put in that annual comparison as well. So that's what we've got there. And again, happy enough with the numbers, nothing sort of leaping out, nothing to highlight, unless anyone sort of wants to pull any figures out, but rather sort of consistent performance. Again, with the issue with the transfers there, but as I say, I think that's a sort of deliberate thing on the part of the pension regulator for those sort of things not to be completed in a particularly speedy manner. So if we just go back up and have a look where we were, so we can just focus on Appendix 2 and 3. I think we were already there, so we might as well just go on to those. Which just show the sort of workflow numbers. I don't know how easy it is to see those. You've probably got the information in front of you guys, so I'll just try and make that a little bit bigger. And it just confirms the sort of upward trend in workflow being created and the workflow we're sort of trying to complete. So it's another sort of increasing target, unfortunately, but at sort of 93% completion rate is pretty good given the volumes that have been coming in, which I think some of the next couple of bits of graph will highlight. That one there is just the usual sort of chugging along sort of information outstanding, you'll notice it sort of drops off. We've really sort of been focusing over the last few months of getting those sort of numbers down, which I think, you know, the numbers bear out. And as I was discussing earlier, the increase in the workflow being created is a sort of ongoing demand, if you like. But you can also see there that we have been focusing on trying to adapt and you know, complete as much as possible within the timescale. So all in all, very positive. We're very happy with the way that the team are performing, given, as I say, the ongoing demands that we're facing. Section 5, don't think we need to sort of dilate on this too much. A new employer, some new academies, and nothing else on there. No cessations. The other issues, which we've got a separate paper on, which I think we're going to discuss in a minute, but obviously McLeod remedy, and we continue to sort of work on this and liaise with the software providers as required. We have a project team who are looking through and trying to look at, because obviously the remedy period extends all the way back to 2012. So there's a lot of calculations that have already been done which need to be revisited. So that's what that number there illustrates. We've identified 2,971 individual scheme members that require review of their sort of calculation by the team, with a possible entitlement to an additional amount having to be calculated and paid. And as I say, we have a separate paper on that just to sort of highlight the issues around that. In terms of pension dashboard, we are now progressing on to stage 2 of our implementation. So we have registered the ISP with our software provider, Haywood, who are the pension administration software provider, as it says there. And we're now sort of into phase 2, which is sort of more in-depth testing on the sort of data that we have and how that presents itself to the dashboard. And we're still aiming to meet the connection deadline of the 31st of October. In fact, I think we're aiming to get there a little bit ahead of time. We've also got Haywood's data cleansing module. It says it will be used. It is being used. We have actually managed to get it into our live service now. So we are now using that, which does bulk checks and bulk updates a lot of data for us, which is very handy. So we're doing all that we can to ensure that the data is accurate in time for that dashboard connection date, which of course is just the connection to the ecosystem. It's not necessarily the go live date, but we're sort of treating the two in tandem so that we have systems and processes already set up and in place that are sort of ready for go live. An update on the employer performance reports. So following the issue of those reports in December, 8 employers with outstanding, excuse me, I did turn the notifications off. 8 employers with outstanding member data have been notified that they will be due to receive were due to receive a fine in line with the pensions administration strategy if they did not provide the outstanding data by the 31st of May. So just by way of update, all the information was provided in time and no fines were issued. So no action was necessary, thankfully, in the end. So we have engaged with individual employers both prior to the December issuance of the reports, and to date there's been a lot of sort of cross work going on between ourselves and the employers to figure out where pinch points are and what issues are with certain sorts of cases and data. The period of engagement with employers, it was obviously fair and reasonable time frame in order to have members, provided with their statements in line with the statutory disclosure regulations, and obviously for us administrators to comply with our statutory responsibilities as well. And this ties in with the dashboard, obviously, that we need the employer data, in prompt time so that we can update members' records so that, should they be interrogating the dashboard, that the information is there. So again, apologies. So that's why it's essential, obviously, to get employers to provide the data within the agreed timescales. So all employers in the fund that have outstanding member information due to be sent will receive their sort of second report in Q2. The covering email will again include clear reminder and consequences of not engaging and providing us with data, which is referenced in the admin strategies Appendix C, if you want to refer to that. So the intention of doing it quarterly is to make sure that we're doing it on a regular basis, and any sort of outstanding data requirements at that point in time are sort of addressed with the aim of improving efficiency and service for scheme members, and obviously compliance with the statutory regulations. And employers with no outstanding queries will also receive a report in Q2, so that obviously they can see how well they're doing. So there's nothing further in this particular report. Did we want to have a look at the McLeod remedy?
We don't have a
Information.
specific paper in this for that. I disagreed with Rachel not to do that. I'll pick it up in a second when we talk about
Okay.
that consultation, because there's a formal consultation out on that. And
Okay.
I might bring you in there because I might not remember all the details.
Okay.
Okay, questions for Xander? Peter?
Not a question, but a comment. I just think you do well to keep the performance up, given the increased workload. So well done.
Ideal, thank you. Yeah.
Paul?
Thank you, Chair. I mean, I wanted to acknowledge that as well. The graph on page 44 or 45 absolutely needs acknowledging, particularly that levelling up of the performance. That it would be churlish not to note that. I had two things I wanted to pick up. One, and I don't think you touched on it. I wonder if you know what's behind that uptick in workload, because it does look material. The other area I was interested in was McLeod, which we're going to come on to. But in terms of the complaints, were any of those complaints around McLeod? Is there a trend there? Because we seem to be in a bit of an uptick on the public profile of McLeod and the impact on individuals.
So the workload uptick, a lot of it is to do with the member engagement. So obviously the easier you make it to have members access their records and their information, the more that sort of generates the queries off the back of that. So we are at the moment doing a very big push on the sort of member self-service engaged software that we have, to obviously ensure that members get onto their records and self-serve. So if they want to do estimates and that sort of thing, they have that information at their fingertips, and that obviously generates additional inquiries off the back of that, as to whether something in their data doesn't quite look right, or whether they thought they had more service, or whether they've got service elsewhere that they thought was joined up that hadn't been joined up. That's the sort of thing that we get. So obviously the more you can get members online and engaging, the more you have that sort of conversation. So a lot of it is that. There haven't been so much queries about McLeod, and the reason for that is the initial correspondence that we have sent out to members was quite clear that their records would all be reviewed, which we will have independent audits to sort of verify that. Each individual person will have a remedy rectification calculation on their record, which, should they wish, will be available on their dashboard eventually in due course in time. But the idea was we would sort of say to people, those who were impacted and who had sort of an additional amount would be contacted, and that would be raised with them. And those that didn't, we wouldn't sort of say an awful lot to them. We wouldn't because just due to the sheer volume, the numbers impacted are quite small. As you saw from the note in the report, the 2,900 figure. Given that goes back to 2012, it's not an awful lot of impact in terms of members. So we sort of pushed from the start to sort of say to people that we would be in contact with them when there was something to note, or an additional amount due. And for those who didn't have any, they can still log on to their system, and we'll sort of make available a calculation that sort of works through why we believe that they're not impacted by remedy.
Thanks. So presumably we would hope that the self-service uptick is something around improving data integrity, data quality, and as those one-off things clear, that should tail off. So that feels like good news.
Okay, any other questions? Other comments? No, okay, we're asked to note that report. So proposed and seconded, thank you. That's again, all in favour, thank you for that. So we're going to move on to item 8 on our agenda, which is pages 47 to 54, which is the business plan update. So back to Anton on this.
So as is normal, we'll use this report as an excuse to update you on a few things formally within the committee. first thing I'm going to touch on is the consultation that I was referring to with Sander. So the government have put out a consultation that's very much technical in nature. So there is some tweaks to the McLeod remedy within that. There are some other tweaks and rectifications of things that are deemed sort of errors in benefits. Certainly around equality issues, things like that. To be honest, I looked at it and thought this is all really positive, non-controversial stuff that everyone and their dog should want to support. So that's why I haven't sort of raised it as and it is very technical in nature. One of the things within that consultation is also going to be a requirement for us to report on our gender pensions gap, which is an interesting concept for me because any gender gap in pensions is a result purely of the pay that was received. Within local government, I am very, very confident that there is no gender pay gap in terms of same pay for same work. I look at Somerset Council and I look at the management tranche and I don't see a gender gap there particularly. I think it's still the case that those working part-time and low paid tend to be female rather than male. One of the other things that I find interesting is reporting on a gender pay gap, certainly in terms of pensions in payment, is actually referring to people who spent a large part of their working lives in the 70s, 80s and 90s. So it's reporting on a gender pay gap or gender pensions gap that is actually a result of very historic activity. I'm not sure what enlightenment we will gather from that, but the requirement actually flows onto the actuary to produce that information for us as part of their valuation results. So for me, it's quite low impact in terms of workload. I'll just take theirs and put it in the annual report each year. So as I say, if you want to delve deeper into the changes to the McLeod remedy, I'll need to bring Sander back in because his technical knowledge of those, I suspect, is greater than mine.
Peter.
Yes, I mean, I appreciate you letting me interrupt at that point because I think I having been involved at the time of the last time somebody showed interest in this, which was probably the 80s, pensions and gender or sex. The conclusion I have at the moment is the answer is there can't be one minister. What are you putting that in a consultation for? Because it is related to money, not and entitlements in the schemes, and it would be unlawful to have a contract of employment that's included sexual discrimination on pay. This sounds a little bit naive to be querying it, and as you say, it is only an artifact of the history. But equally, it's a very, very complicated topic because, of course, historically, persons of the female sex have lasted longer than persons of the male sex, and that's part of what the actuary adjusts for when he's looking at the total fund to work out how much he's going to need. So, we're going to equalise life expectancy as well.
But there's no adjustment in the benefits received against that life expectancy. So. And there may well be different cohorts. Again, if I suspect if you started to look at life expectancy on stratas of pay, you'd probably find greater life expectancy for the higher paid. So, yeah, there are. But I suppose the one thing I would say is that whilst I feel that we won't be enlightened by publishing this data, I suppose having the data there will lead to a debate, which hopefully will lead to all people being better informed.
Can I just challenge you on that? You said that there is no difference in the benefits paid. There is. If we're talking about the period going back to the 80s, then firstly, the retirement age for females was earlier than the retirement age for males, so they would have started drawing their pension earlier, and the life expectancy was longer than it was for males. So you have to actually invest over a longer period and pay over a longer period. And the absolute amount of pension received during the pension payment is actually higher. So yes, the rate's exactly the same. Totally agree. But the amount of interest and context, weight in the decision, if you like, will depend on your workforce. And if you were a pension scheme for an industry that had predominantly one sex or another, then that would affect your investment requirement.
I should point out that the retirement age within the LGPS scheme is not differentiated between males and females. That they are. It's certainly. I mean, Xander might. It's certainly not. It's certainly been the case that they have the same retirement age since I joined the scheme in 2003. So I can't remember what time when the scheme was changed prior to that. But Xander, do you know?
They've shared the same retirement age. It's never been sexually explicit as to when you could go on the basis of gender. It's just the regulations stated that male and female members could go at the age of 65. Although in those days you had the 85-year rule, so if you had the 25 years service by the time you were 60, you could go with no reductions, which tended to favour male colleagues because they wouldn't have gaps in their service or part-time service impacting them. So I think in terms of the gender stuff they're sort of looking at the moment, they're sort of focusing on things like unpaid maternity leave or sort of that sort of thing that's impacting, female members disproportionately compared to males. So that's, I think, where the focus is. So certainly unpaid absences of 31 days will now be pensionable automatically. I think that's just something that makes everyone's life easier in terms of employers, as well as ourselves. And it's also sort of fair on the members because to buy that back, it's quite onerous to do a sort of buyback of missing service. So that I think that's the sort of area they're focusing on as to where they can deploy any sort of resource or any sort of adjustment in terms of members who are sort of disproportionately lower paid anyway and are likely to be part-time. I think that's where the focus is of the fairness consultation. But obviously, I'd probably raise another one there if I can. The bigger one for us is the sort of survivors equalisation benefit. So if we're talking of historical discrimination, there certainly was there in terms of survivor benefits, and that is sort of looking, well, it will be rectified in the regulations from August, but that means that essentially we will have to revisit every survivor calculation going back to 2002 and wiping out those discrepancies. So that's the discrepancy that, for example, the statutory right to a widower's pension was only introduced in 1988. So females who had service before that date, that wasn't included in the widower's calculation when they passed away. They would have to have bought that service back. I think some funds or some administering authorities made them buy it back. Some of them sort of gave it to them for free, but there was a discrepancy there, for example. So a lot of those discrepancies as a result of a recent court case, I say recent, I think it was a few years ago now, but the public sector regulations have been a bit slow, certainly with regards to the LGPS of amendments being made. So there is certainly a discrepancy there that is a discrimination there that's being wiped away. But as I say, it's going to be an awful lot of work for us because we have to go back and revisit all of those calculations.
This will be very brief. The usual statistics, membership numbers are in the paper. Sorry, I'm just catching up. And there's nothing specifically different. The trends that have been in place for some time are perpetuating on that. So unless there's questions, I won't take them. You will note that the referred to appendix of the financial outturn for the period is not attached. For this particular quarter, I always like that report to match what's going to be in the annual in the accounts, and on the basis that we haven't actually quite got there. I will report on it in September when you will have the full accounts rather than here.
I think that's right and proper, because I think anything else would be potentially disingenuous. Okay, so questions, comments, queries? No, not looking like there are any. Okay, well, we're asked to note that report, so I'm again proposing from the chair. It's been seconded by Peter again, I think. That we're all agreed. Excellent. Right, so now we move on to item 10 on our agenda, which is a review of the pension fund risk register. That's pages 59 to 72 in your pack. So, back on.
Yes, the risk register. There's not been any changes to the risk register in the quarter. And I don't have anything specific I wish to raise with you. So unless there's any questions, there are. Peter.
Yes, very much so. I think the government is looking in policy terms at forcing us into yet another round of amalgamation, reorganisation, and is also doing so in a way which I think separates those involved in the representative roles for organisations which are members of a pension scheme and thus representing a sector of members within a fund, further from the administration and outcomes and policies under which the financial team manage the money. And I think the reputational risk and potentially performance risks of change probably ought to be more of a consideration in our risk register. It's a legislative change that is yet to land. We know roughly what direction it's in, and I just think it's in the impact of churn and so on our members. And I just think we should record the thing as a risk, largely knowing, as we've discussed earlier in the meeting, the issues are handled or nugatory or of small scale relative to the whole, and you know, it's business as usual. But I just think people would expect to see that at a time of change, the effects of that change were reflected, were being recorded and scaled in the risk register.
Yeah, noted. I mean, yeah, there is I think it's the first risk on the register is the risk of regulatory change. It's the second one. So yes, noted that we are entering a phase of increased risk as the government has laid an inordinate amount of, or suggested we are going to get an inordinate amount of new regulations.
Can I suggest, therefore, because I concur, that when you take PF Gov 2, the risk of regulatory change, which is where we are, that we change the current score for likelihood from 4 to 5, because it's actually in the extremely unlikely it's not going to happen part of the curve.
Well, and also we are in the point of almost highest risk in that we are virtually certain that there is going to be regulatory change. and we are clearly aware of the direction of travel, but we are absolutely ignorant of the detail.
Which is presumably why we're only virtually certain. Okay. I've got Liz Layton online. Liz, good morning and welcome.
Thank you very much, Chair. If I could just ask a question of Anton, please. I just wanted to ask whether the risk register has already moved to IdeaGen, or whether that is something that will happen in the near future, along with all the other risks for Somerset Council.
Constitutionally, the pension fund is different,
Okay.
separate. You are not, as a executive member, responsible for these risks. Whilst I am very happy to represent them in the same way, I believe it is dangerous, inappropriate to allow them in any sense or form to get commingled, and therefore there are no plans for them to go onto IdeaGen.
Okay. Thank you, Chair. That's interesting. Something I didn't know before, but then we never stop learning, do we? Thank you.
I mean, constitutionally, if you wish to read the Somerset Constitution, which I'm sure you've all done already on many occasions, there is a paragraph in there which specifically states that the delegation of the pension fund is direct to this committee from full council, and then obviously from this committee onto officers as necessary.
Okay, Chair, if I could just go on to say, if using IdeaGen, which is a piece of software rather than any kind of controlling mechanism within Somerset Council, it is just a piece of software. If that would represent the risks more clearly, then maybe it's worth exploring whether that can be done without breaching the Constitution. But it's working on the same premise of 5 by 5. So it just shows it on a risk matrix in a different way.
Yeah, and I'll be the first to also comment on personal capacity. It's just getting the discussion as to how those risks are best softwared is not a high priority for me personally at the moment, I'm afraid, for reasons
Okay.
that will become obvious when we get into private session. And I appreciate that I'm quite happy for councillors that are online to join that private session, but we might have to work out how to join you into it. I might have to invite you into a separate Teams call, because we'll have to turn off the public recording. So if you wish, you wish me to do that for that item, then please let me know, and we'll invite you into something.
Okay, Chair, I have another meeting at 12, so I can only stay with you until then, but I appreciate that. Thank you.
I sincerely hope we'll be completed by 12. Okay, Peter.
Yes, just for the avoidance of doubt, I believe you're currently recording the risks on an Excel spreadsheet. Thus, there are no additional costs for a risk management system. Yeah.
No.
Okay, good. That's avoided doubt. Right, the recommendation is to note and approve the risks contained in the risk register. We've had a discussion about that. I think there's a slight rise, which I think we are approving, showing that risk is 5.
Yes, Chairman, it was my
Round 4.
proposal that we raise the probability for the second risk, which gives it the highest score, and we note that.
I think that's appropriate. I beg your pardon, John? We're noting, and I think
Noting
we're
with that comment.
caveat, with that comment, that we feel that risk of 2 should go to 5.
So you
which
are,
I think is an appropriate thing to do.
you are agreeing that
We're
change.
agreeing that change. Okay. No, I don't want to.
Yeah.
For the avoidance of doubt, John.
Yeah.
For the avoidance of doubt, John, I think that's what that's what I believe we're doing. Okay. Peter, are we content with that? Yeah. Okay. All right. And That's found favour with everybody, I think. Yes, that's, again, it's unanimous. It's a very good one like this. Okay, now, item 11 on our agenda is the.
And this is, I must apologise to you because this got put in late and I thought I'd
Yeah.
agreed that we weren't going to put it in as a separate paper and now it is in. So it,
Well-
shows my state at the moment that I'm concentrating so hard on technical items.
Yeah,
If you wish to have a separate debate about it, but I think we probably, unless Sander has anything he specifically wishes to raise, I think we have probably covered it.
I think we probably have, but Xander, is there anything you would like to add?
It was more to set out the reasons why, you know, we were pushing this back effectively, or the reason why it's being pushed back. It's not sort of preference. It's more of a necessity. Just owing to the way everything's happened. So we were going to go and discuss that, but if you don't wish to hear it, then that's fine. I can. Depends if members wish to hear it or not.
Okay, Peter?
Yes, Chairman, I think, you know, just to put something in the debate, I think this is the proposed approach is the lesser of two evils. Yes, pushing it back slightly makes most sense. Rather than throwing a large amount of resources which are brand new and unfamiliar into a busy situation, you know, it makes more sense to use the time access.
I think using the time more usefully. Yeah. Okay, so that's, we're noting the recommendations to extend the McLeod remedy intervention date of the 31st of August, 26. Date.
That is the date on the report.
Yeah,
Again, Xander, that's for Xander's
Just want
purposes.
to make
not
sure
mine.
I had the right date, that was all.
That is correct. Yes. Yeah.
Okay, excellent. So, I see that, and yeah, look at that, we're. So that's unanimous again. Okay, now, do you want to go into a private session now for the update on pooling, Anton?
I do, so that I can speak freely.
In that, no problem. I need
And
to.
would Councillor Leyshon and Councillor Kendall like us to invite you back into a Teams meeting so that you can hear that debate, or are you happy to leave it here?
I shall leave it here myself.
Chair, I would appreciate remaining in the meeting if it's possible.
Happy
So-
to do that, Liz.
Sorry, Liz, don't remain in this meeting. I will send you another link because this is a public link.
Okay.
Okay,
We're going
thank
to
you.
end, sorry, Peter, you want to, sorry,
Yes,
hang on, Liz.
just for clarity, I think we've finished the agenda. We're ending.
We
it
have
and
finished.
starting
the
an
agenda.
internal.
We're starting
discussion.
an internal,
Thank
we're
you.
going to go to a closed session meeting. I have a form of words which I need to. Okay. Not an official.
Yes, that is correct.
So we either have to. We're going to a part two.
But
Procedurally-
there will not be, there will not be, I suppose we probably ought to go into part two. I do not believe there are any decisions you will need to take, but that would be me presupposing your wishes, and that would be incorrect of me.
That would
And
not-
therefore, the correct thing to do would go into a part two
In
meeting.
that case, I think we're going to.
Sorry, we do have a procedure that we need to follow.
One at a time, one at a time, you can all speak, but one at a time. Peter, you're first, then you, John.
Chairman, I'm not seeing clarity on the agenda that there is that there's a restricted item. So unless you have, from the chair, announced an urgent and unavoidable item that needs to be dealt with in commercial, and you make the declaration now, I think we can't take decisions in the Pensions Committee meeting scheduled under the current agenda unless it somehow gets onto the agenda. And
The item is on the agenda.
Yeah.
I didn't make correct provision for it to go into private session because I didn't provide a paper. So the paper didn't need to be in private session because there is none, because I wish to make a verbal update, because otherwise I'd be reporting on things that happened 10 days ago rather than things that have happened in the last 10 days, which are more pertinent.
Okay.
I
so-
apologise for that.
No,
That
no,
is my
no,
oversight.
Not a problem. So from the chair, I am going to say that this is a matter of, but John, I think we can make, I think,
So I'll explain what we need to do.
please.
As we're going to go into private session, you need to specifically state the reasons why, because it has to be statutory reasons as to why we are going into private session. You say that in this public meeting, we can leave the meeting. Then whether you are going to invite Councillor Leishon is a committee decision, but we just need to record the
Okay.
actual reason we're going into.
Okay, and that is because
Private
it's a
session.
matter of item of urgency, which is commercially sensitive, and we will wish to have that discussion in a part 2, because that is the appropriate place rather than in a public meeting.
So I will be
So-
speaking about the commercial position of Brunel, its possible wind-up costs, and conversations I've had with other pools and opinions I have on those pools, which are sensitive and obviously would impair our negotiating position with those pools going forward.
Right, which is
Mr.
precisely
Chairman,
what-
point of order. I think I should apologise to the committee because I misled them, having reread the agenda. This is actually agenda item 12, the update
is.
on pooling, isn't it?
Yeah.
It was not clear to me at the time where I
No.
said it wasn't on the agenda,
No,
and
it
I now
is-
understand the
It
context.
is on the agenda.
So,
and
so as
I am
such, it's
going-
only necessary to pass the motion
I'm
to go
going
to private
take
session.
it- Well, I've got to do 2 things. But firstly, we've got to agree that that's why we're going into private session, which I'm sure we will be able to do. And secondly, that I'm going to extend the invitation to the deputy leader of the council, Councillor Liz Leishon, in her role as an executive councillor, to attend that meeting and hear the update from our pensions manager, pensions and treasury manager. Now, I'm going to propose that from the chair. Can I see a seconder, please? Thank you. And any, those in favour of those 2 actions? Thank you. That's unanimous again.
Can I read out what has been put on the chat, because Councillor Leishon has, so exclusion of the press and public, we need to specifically state in terms of section 100A, schedule 12A of the Local Government Act, that the press and public be excluded from the meeting on the basis that if they were present during the business to be transacted, there would be a likelihood of disclosure of exempt information. So this is why you need to specifically state the reason why you do not want the public to be part of this meeting. So we are going to agree to exclude the press and public during the consideration of Appendix A, which relates to exempt information, on the grounds that it is likely, in view of the nature of the business to be transacted or the nature of the proceedings, that if members of the press and public were present, there would be disclosure to them of exempt information. Is this correct?
Yes.
Right. I'm
Chair-
very sorry.
Chair, may I just come in just to say those words were taken from another meeting. The 2 words Appendix A are probably not appropriate. I would replace them with the item number from your agenda.
It's
My
item
apologies.
12.
Item 12. Right, so I am very sorry, but I was busy trying to look up what Liz has just put here. Can you please tell me who proposed that we go into private session? Simon, and who seconded?
Peter.
Peter. Right, so we are now going to
It's
end,
unanimous.
and it's unanimous. I did see that part. We are going to now end this public meeting. And then can you please tell Councillor Leishon the reason and if you are going to see her in another session?
Okay.
Are you
We'll-
going to see Councillor Leishon in another?
Press and the public that are excluded, it doesn't exclude the council.
Thank you, Xander. We'll let you
sorry,
get
I've
on and
ended.
do something else there.
I've
I will
ended the
depart. Okay, thank you.
Okay. And thank
Bye.
all members of the public for staying with us. I'm sorry it got slightly convoluted at the end, but these things have to be correct procedurally. So, Liz, have you received an invitation to the It's saying, right,